Hi, Richard here on the Tuesday the 19th of April. It's the morning, and I thought we'd look at first, of course, the US dollar chart and the importance of this ending diagonal as it's come down. We had that test at the bottom of the trend channel due to the information that came out overnight. This is important stuff because the stock market averages really opened sharply lower after there was a downgrade of the US credit rating to negative. This came out about 30 minutes before the opening bell, and prior to that the stock futures had already moved into the red about a rate hike in China and the European debt crisis as well, and then some lackluster revenue numbers coming out from some of the major banks. So the whole point is here that what we're looking at on the daily chart in terms of the US dollar, as the information becomes more bearish, we will see this ending diagonal finish and retrace up somewhere to the origin, and back on the weekly you can see that that will come up and retest this long-standing since early 2008 trend line and should break through. What does this mean for the euro? Well, it looks completely the reverse, and you can see the big down day, which if I went to the weekly chart could be a bit cluttered, but you'll see this also going back to early 2008. Here's the touch point, here's the move through, here's the rejection, also an ending diagonal, and we'd expect to see, I would imagine, the end of this pattern. This should be it. So there's some short opportunities, but yet to be confirmed. With a break lower, I'd like to see it move lower than 1.4, but needless to say, there'll be a bit of chop here. There always is at a turn, although if it does what occurred over here in this wave 5 completion and continues to move sharply lower, we need to be in pretty quickly. Looking at the stock market indices, starting with the Dow, moving back down to test this long-term support resistance, and the likelihood is that we'll see some support around here at the 12,000 mark, and then a bounce, a bounce for a wave 1 to 2, probably back up somewhere just below this point here at 12,300, and then it'll move sharply lower in an extended wave 3, which really should take it down to this long-term moving average here, or indeed we can put a Fibonacci extension on it now and just see what that would mean. As we measure these moves, you can see that the first port of call would be this short-term resistance. If it just works its way through, blasts through, then 11,850 down to 11,500 as this long-term moving average moves up. That should be a point of confluence, and then if the thing really gets going, then we'd look down to as low as 10,900 or 11,000 as a big round number. Looking at the Australian market on the XJO, it's really not been supportive for some time now. We've got a short signal. I was expecting a little bit of a retest there. That's still a possibility, and this is the Fibonacci extension we put on last time, so that first target for this would be down around 46.50 to 46.30, and then we'll see what happens from there. But certainly there's some downside coming up, a rejection of this this long-term rising trend line. Looking at gold, because everyone seems to be interested in that. This is the weekly chart on gold. It's still going up. What a great reversal signal there. This is an old notice here. It says break here below here will open at 1250. Well, that never occurred, of course. The reverse happened, and it is now targeting up around that $1,500 mark. 1,500 to 1,520 would be a reasonable target there based on this wave 5 extension. If we get an overthrow, if it really blows off, then we would expect to go up to 1570, which would be a big Fibonacci round number. 15 and also the 1572 would be that target if it blows off. Silver's not in a dissimilar chart pattern. I can show you that clearly. You know, it's reached, this is a bit cluttered, so I'll remove some of this, but it's gone through the 1 for 1. This leg here is now been equaled, and it's pushing up to the top of, well, this is a very ordinary sort of trend line, to be honest. We could almost drag that back like so, and even then it doesn't quite work because we're really getting sort of a blow-off situation as it breaks through. Will it make it to $48? Well, you know, just don't know. But that is the 1.618 extension of this particular measurement. So big moves coming up, and it'll either blow off or indeed it'll power down. So let's have a look at the financial geek industry sector on the Australian market, and this line is being still respected. We had a retest and it's broken down now. The banks are showing some weakness as well, and in the event that that does fail, the targets are long-standing. We'd expect this to come down to the 4,300 odd mark, with a target down here. This is a long-standing target, 41.36. Certainly the market force is giving us an indication now that the weakness is coming into the market. You know, this is a beautiful trending early warning signal indicator, and measures strength and also the moving averages. So therefore we're looking for prices to move lower off this trend line. As far as materials go on the other side, if I can find the materials, you know, they're looking like that we've had this reversal. This is not a bearish engulfing pattern because it's actually an inside day, but it's, you know, it really is a sort of a very strong reversal, and we're now just seeing that weakness creep in. So I would expect that to hold unless some unbelievably good news comes in, and you know, the point to go lower on that is down around the sort of 1350 mark, based on a retracement at least at this point down to the 200 moving average, which is actually about 1400, not 1350. So what else I got to show you? Let's just have a look at Amazon and see what's happening there. You can see this overlapping, very volatile pattern. You know, it's been incredibly volatile. These are big moves, 160 up to almost $190 there. So you can trade that on a daily basis. Let's go to that chart and have a look, and you can see that we're, you know, moving down in this 1-2-1-2 type of pattern after 5 waves complete here, and this will get some legs up in the event that the market does move slower, does move lower, and it'll push down quite heavily. Okay, the last one that I could show you is, in fact, if I can get the chart up, is the VIX, which is the volatility index. Let's just have a look at what's been happening. This, of course, was the GFC in terms of the very complacent low rating at 18, and then record high on the volatility, or the fear index as they call it, up around the 89 to 90, and then, you know, it traced down as the market has worked its way back up. That was the April 2009 high on the market, and then it traded down heavily, and then has just proceeded to come back over the last weeks down to this sort of very, very low sort of 15 to 16 rating. You can see the trend line there as it goes all the way back. This is you know, really significant support. Wouldn't expect to see it to go much lower, although it can, as you look back in history down into late 2006, for the end of you know, effectively the bull market, and the beginning as we worked our way, particularly around here in December 2007. October 2007 was the end of the bull market and the start then of the GFC, and of course in July it really got its legs under it. That is a third wave there, representative of a third wave. So a little bit of movement up, not enough to really get us worried at this point in any way, but certainly a retest of this moving average. If it breaks above, then we're going to get some price action to the downside. As the VIX moves up, the indices come down. Alright, well that's it. I'll talk to you soon.